had to say that about
Debatable.
you. Debatable. This time we have Emily Lord, Director of Deal Origination. I always love these funky titles. You can always tell these Babson grads. The funky titles.
Very creative.
Want to be noticed in this class. From the Watermill Group, and you're in Cranberry Hill, Lexington. So Emily, nice to have you back again.
Thank you. Thank you for having me.
I think you came back because you said I didn't do a good job of interviewing you the first time. Is that correct?
Or a good job of setting me up last time.
I said you up. So why don't you tell us again about the Watermill Group?
So we are a middle market private equity firm based out in Lexington. We've been around for about 30 years now in one form or another. It was originally started by Steve Carroll and his brothers and father out, and they were basically bootstrapping industrial deals. And eventually they decided they were better brothers and business partners, so they broke off into their own investment groups, and Watermill morphed out of Steve's part. And we've stuck to our roots and been investing in industrial manufacturing and distribution businesses ever since. We're not really a traditional private equity firm in the sense that we don't have a fund, but we have a group of investors who invest with us on a deal-by-deal basis.
I like that better.
Yeah. We find it, we've thought about raising a fund before, and you go to these conferences and you meet a lot of people and their first question is, how big's your fund? And it just kind of bugs me, but it's, our investors allow us to be very flexible in waiting for the right deal. And then we have no specific time that we have to exit at the end. We can wait to exit when it's right for the company rather than when, closing out our fund. Or
so there's less pressure.
Less pressure and not tied to deal dynamic or to fund dynamics. And it also allows us to spend most of our time analyzing deals and making sure we find the right company rather than trying to raise money, things like that. So
I would assume 2012 was a big year for you guys. It was for everybody else.
2012 was a big year for us. We hadn't done a deal in 1 or 2 years before that, and not for lack of trying, but just the right thing hadn't come along.
You're not the only one who didn't do a deal before that.
And it's kind of a tough market, and especially in the turnaround market, you would have thought coming off of the sort of economic downturn that there would have been more companies that were either in bankruptcy or going through some sort of tough situation, and those deals were just hard to come by because the companies were hunkering down, waiting for their revenues to come back for a couple years before they sold to get the best value. But last year we ended up doing 4 deals. 2 were 2 small diameter metal tubing companies.
To bank, did you say?
What?
Did you say 2 bank companies?
No, 2 small diameter metal tubing companies.
Oh, metal tubing,
so specialty metal tubing companies. And they go into everything from heart stents to oil and gas end markets or downhole drilling and nuclear end markets. And then we bought a company called Manistee Papers out of Manistee, Michigan, in the Upper Peninsula, to add on to Futuremark Paper, which we already owned in our portfolio. That's a recycled paper company. And then we also bought Tenier, which is a metal and plastic fabrication business out in Wisconsin.
So are they all manufacturing?